What's going on, everybody? This is the Blockchain Backer, bringing you the latest cryptocurrency news and analysis. Today, we'll be taking a peek over here at the Bitcoin price chart, talking about the altcoin market, talking about the economy, talking about the cryptocurrency market. As we're getting ready to head into this holiday weekend, prices have obviously just been crash ever since middle of May, since we had the whole Luna and UST fiasco happen all at once. And then mix in macro fears at the same time and worry and implosions and insolvencies of companies within the cryptocurrency market. But I saw this post over here by Ben Armstrong, or BitBoy Crypto, over there on YouTube. And I saw his post over here on Twitter. He said, a crypto tsunami is coming. The tide gets pulled back hard to help build the wave that no one sees coming. We are in the midst of the tide getting sucked in. That's what a bear market is. But rest assured, the tsunami is coming and it's going to be bigger than ever. Just kind of a little remotivation of the cryptocurrency market. And I spent the morning over here while reading Generation Infinity's Lighthouse report over here from several creators in the XRP community and the crypto community that you guys might recall. Studying all the developments that are happening within the cryptocurrency world. Sometimes it's hard to remember that it all looks like gloom and doom when prices have been moving down so dramatically. And really just not looking like there's any end in sight coming for these things, especially with Bitcoin sitting there beneath its 200-week moving average over here. But like I said earlier this week, I'd be spending time kind of researching to see where is this space going, where are things going, and kind of questioning my own thoughts on different things that I have always thought that would matter within the crypto market. One of those things has always been privacy coins, right? I'm like, man, from a currency standpoint, but that blockchain technology is developed so much more than just being an actual currency. And so just, spending time to see how the market's developed and grown and the use cases. It's been fun to spend some time doing that, Typically in bear markets, that's where you get the opportunity to do that kind of stuff rather than focusing so much on what's happening in the day-to-day with price action. But yesterday I put out a video discussing the Grayscale Bitcoin Trust on how GBTC was showing what like a crashing pattern looks like right in here. And I watched this video over here with Danielle DiMartino Booth and Leah Halpern discussing more of like the macro things going on in the markets and that there's a lot more troubles out there in the macroeconomic world. But there was something interesting that came up in there about the weekend that we're coming up to. We're coming up to the 4th of July weekend. And like many, I will be celebrating that holiday weekend because I live in the United States. God bless America. I have family coming in from out of town. I will be off from Saturday through Monday. I will be back on Tuesday. But that with it being a holiday weekend, that it'll be a big test for Bitcoin on this holiday weekend because it's a banking holiday. Danielle DiMartino Booth is talking about all of, the people she knows on the back end talking about it, saying, hey, you better get out of Bitcoin throughout the weekend. Whether or not that's true or not, I don't know. I saw Anthony Pompliano post a video over here as well. Bitcoin must survive the next 5 days. They're talking about it too, going into this holiday weekend and how it could be a rough ride for crypto and for Bitcoin. So I found that interesting that I found that in two different places kind of at the same time from people that are unrelated to each other. One of the real interesting things that has happened here in just the last, 48 hours is that after silver's been hanging up in this range since July of 2020, 2 years being in this range, it finally took a pretty deep plunge today. I showed this actually last night. So it started last night and then into today, it still has kept going. Pretty decent move here for platinum as well, taking out the lowest prices since November of 2020. Gold having a move, but kind of staying up in that range. Stock market kind of wishy-washy over here on the Dow Jones. I mean, we can still clearly see it's in this downtrend, and whether or not it's going to take out that high set back there on February of 2020 before the C19 sell-off ended up happening. But one of the things that has happened that's kind of been unprecedented and people are really talking about, and I've noticed too, I've even been talking to people like, man, have you seen this? How fast this has kind of turned here on these Treasury yields that, just a couple of weeks ago, they were, moving to the upside drastically. And then now they're really rolling over. You got bearish divergences over here on Treasury yields. You got the cross coming in here on the weekly time frame here for the 10-year Treasury yield at the same time on the 10-year government bond. So it's like somebody's buying up the debt. We had a 45-year trend in here that it poked through there just for 1 week and then reverted itself back down below the trend. In addition, when you look at it on the weekly time frame, you look at it from a candle perspective, and what happened back in here is that it really just wicked above the high that happened back there in 2018 and is reverted back down now with a bearish divergence and a MACD cross underway. And then yesterday, the Atlanta Fed revised their GDP now model which anticipates U.S. GDP will contract 1% in the second quarter, which Lynn Alden over here says Atlanta Fed's GDP now model is predicting that Q2, the one we're finishing up now, was the second quarter in a row of negative real GDP growth, which means this data coming out right here indicates United States in a recession. Modified data, revised, we're now in a recession. And boom, 10-year Treasury yields taking a whack, bearish divergence, MACD cross, down goes silver, down goes platinum, taking out those lows, and just hard hits on these yields over here on these government bonds. See over here on that 30-year right in there as well. See that wick that just gets right up there to that high from back in 2018. Whack, bearish divergence, cross coming in here. I don't know. It's interesting. It's hard, right? Because the thing everybody was really worried about was inflation, right? Inflation's too high. Inflation's too high. Well, we see metals coming down. We see wheat getting whacked down. Look at this just in this last week. It's nothing but red. And we're looking like since last week, wheat is down 20%, now down 30% off of its highs set back in March. Last 2 weeks, corn is down about 16%, really being down about 18% off the highs. So most of this move happening in these last 2 weeks. But, everybody's favorite that I occasionally bring up, live cattle futures, still holding up relatively well. But what's interesting about cattle futures from 2014, heading all the way back, look where it topped live cattle, 702 Fibonacci retracement in here. But we've seen that from this moment here, that things like wheat and corn and everything, it's been pulling back. So commodities have been pulling back here. So is inflation already peaked? And now the bigger worry is recession, as these new updated estimates indicate we are in one. We got the data to say it. And so like we've always talked about on this channel, we don't know how crypto can react during a recession. It's never existed in one. It's always existed during the glory days of a big rise up here in the stock market. We can see that the Dow Jones Industrial Average has gotten very close to a 702 Fibonacci retracement. It's had a pretty good pullback in here. But if it starts gaining speed, anytime I've ever seen in a bubble structure where this level gets taken out right in here, that would indicate that it has popped. Is this just a pullback before it finally goes on and has excess and then we end up popping in here? I don't know, but if we take out these levels, that would probably be pretty bad for markets in general, and we have not seen what has happened to the cryptocurrency market in that circumstance. And we've seen that move down happen really as these 10-year government bond yields have been rising. And here in the last 2 weeks, we've really had a really sharp pullback, 0.6% drop here on this Treasury yield, going from 3.5% to currently at 2.9% in just 2 weeks. It's really the most that we've seen. So I don't know, a lot of information to take in here. And I want to cheer for the cryptocurrency market, but I do know we're getting here. We're now saying we're in a recession here in the United States. The Dow Jones is a total of 16%, 17% off of its all-time high. But the big question is, are we going to take out those? And we're going to really send this thing moving down in a sharp manner. If we do, it's likely short-term, maybe medium, maybe longer-term, not good for the cryptocurrency market in a case of that happening. Back in 2018, the bottom of the bear market was marked right in here for the 10-year yields. And we could see this is where we've gotten to right in here. And that was the bottom of the crypto market back then. And that even in this circumstance right here, it was only able to just get a wick to close above those price levels over there. It wasn't able to do it. So I don't know. It's a lot of data coming out here. It's wild to see in the last 24 hours to see that we've been marked by actually being in a recession. And then at the same time, you see the breakdowns happening over here on silver, right? And metals and commodities and Treasury yields, all of them moving down. But even with all of them moving down, Dow Jones is down 77 points in here. And then, with crypto, I mean, you know it. We've had our own whirlwind of events. In May, we had Luna and UST. Then in June, we had Celsius, 3 Arrows Capital, BlockFi, Voyager Digital, insolvencies, liquidations, layoffs, all in June. What does July have to bring? The macro picture, and then mixed in the events that are unfolding within the cryptocurrency market itself. It's hard to imagine what would be the case that would cause prices to start moving up rapidly outside of a bunch of people sitting on the sidelines and FOMOing back in because prices are moving back up. It's hard to imagine what that is. I'm having a hard time visualizing what would be a circumstance to cause prices to rapidly rise, and I just don't see it right now. mixed in. If you caught the video I put out yesterday talking about crashing structures and how grayscale Bitcoin's trust, this chart looks different than Bitcoin's. It's very different because the high that was set back here in November was not a new all-time high like compared to February for grayscale. And the low that was set here in January was a low below the summer lows of 2021. This is a different picture than what we actually have on the Bitcoin price chart. But if we were just charting the grayscale Bitcoin trust, this looks identical to what crashing structures look like and indicates further down of multiple waves further down. So that doesn't provide a whole lot of optimism for like an alt season coming in or big rises happening in the markets. Mixed in, we have a holiday weekend coming in. We just got told we're going into a recession. We're watching metals break down. It was funny because I put that video out yesterday talking about the crashing structure. And literally like 5 minutes after I posted the video, we've been talking about, this level breaks. It officially means there's no longer higher highs and higher lows. Looking for something different now. It goes whack. And then it just, and then now it's pulled itself back down. But I get it. That was cool to see. That's a big move. We haven't seen a move like that happen in here, but was that just a shorts, right? Did everybody start shorting the prices once that got taken out? And now that was just a quick little short squeeze in there. Hard to say. I for one, will be happy to have a 3-day weekend to just kind of step back and not really talk about charts, but more of like, just look at the market from a perspective. Because like I've always said, bear markets are incredibly difficult to navigate. When I put out my video back there in December, saying the bear strikes Bitcoin, trying to figure out how to navigate a bear market. They're so difficult to navigate. They still are. To this moment, it's still insanely difficult to navigate. And now we're faced with something that we haven't been faced with before. And everybody's kind of have to assess that on the importance of that and what it means because we don't have the information to know. We have officially in the United States just been labeled as being in a recession. Prices have already moved down drastically. Have we already priced in the fact that we're in a recession and that was all the pricing in of it? Or does it mean things are going to get far, far worse for the cryptocurrency market from a price standpoint? And are there going to be continuations of like what was just Luna and UST back in May, then turning into all the insolvencies that happened in June and the casualties of that came to surface? What does July have to bring us? It's a washy time. Previous bear markets for Bitcoin, if we're in a full-blown bear market, which it's starting to really look like we are, when you draw down 70%, that's in every bear market that Bitcoin has had, a 70% drawdown is marked by some kind of retracement. We have had none. We have had just none. So are we going to get one? Or is Bitcoin going to follow along with what's happening with the Grayscale Bitcoin Trust? Now, Grayscale got denied by the SEC to have a spot Bitcoin ETF, so they're subject to their own things in here. But at the same time, the chart looks very similar to Bitcoin, even though price levels are different, right? This didn't set a new high. This set a new low. For Bitcoin, this was a new high. For Bitcoin, this held this low up in here. But the structures of the moves that happened in here, it's like Bitcoin, right? So this looks like a continuation of a falling market here for the Grayscale Bitcoin Trust, which my best guess would be that, same thing's going on for Bitcoin over here, especially since it closed multiple weeks below the 200-week moving average. And I just couldn't imagine if you actually stepped even further away and closed another week below that. Go find me examples of that ever happening. It just doesn't exist out there. We can go way back in here. You just don't have multiple weeks getting below that and closing below that for Bitcoin. So the thing is, too, yesterday was actually the close of the monthly candle for Bitcoin as well. And for the first time in Bitcoin's history, it has never closed a monthly candle below the 50-month moving average. As you can see, Bitcoin closed the entire month below that. So one would say, hey, that's not good, but it's also never happened before. So how does it react below it? Does it head down and hit the 100-month moving average, or does it wick its way back up above it? It's uncharted territory when it comes to that metric in itself, because it absolutely has never done it before. Now, speaking of the monthly time frame, I don't use the Bollinger Bands very often, but there's a lot of people out there who do for volatility, and lots of people who are pros at it. It's their go-to thing on what they use, but I don't use it very often. But John Bollinger over here on Twitter, the inventor of Bollinger Bands with 222,000 followers, he posted the picture-perfect double M-type top in the Bitcoin USD on the monthly chart, complete with confirmation by bandwidth and %B leads to a tag at the lower Bollinger Band. No sign of one yet, but this would be a logical place to put in a bottom, which shows how on the monthly time frame, Bitcoin came right back in and slapped the lower end of the Bollinger Band on the monthly time frame. I threw some Bollinger Bands on over here on trading view. I don't use them. I just went in here, hit indicators, and turned on Bollinger Bands to see how they're reacting in here. You could see that, yep, we have hit the lower end of the volatility Bollinger Bands. You could see in 2018 is kind of holding in the middle, then it collapsed and then went back up to the top of the Bollinger Bands. We could see here in 2021, 2022, holding the middle, then finally falling back down below them as we did back in 2018. Boom, getting caught right down here at the lows. So I don't know. That's interesting too. I'll show that to you. Again, looking over at the total market cap of crypto, it pinpoint nailed the previous all-time high from back in 2018. Still, candle closes are above that 200-week moving average up in there. We'll see what happens this weekend. There's a lot of people predicting that due to banks being closed, due to institutions not participating throughout the weekend, be a low liquidity weekend. There could be some craziness that happens throughout this 3-day weekend. When you look at the total market cap of crypto and you say, hey, if we lose that and if we lose the previous all-time high, where is really the line of support for the entire cryptocurrency market? And it's really an open gap in here from 760 billion all the way down to 391. It's like, or even potentially even lower, right? Maybe down further down in here, but that's definitely a wide open gap that would be right in there. You're looking at a 50% shaving of the market heading down to right there. And after moves down like this, it's just nearly impossible for me to make like any type of accurate predictive guess or speculation on how it would get there, or if it would just keep going down in a straight line. Like what I could imagine, which would be like reasonable for within my level of skill set, is to be like, hey, we bounce and then, maybe we only get back into this area right here. And it's like, okay, that was a pretty good retracement that came in here. We're now in retracement levels of this market. We could potentially be looking for more rollovers and things to start working their way back down again at this point. But after you get a move that's just like that, for me and my own comfort level and who I am, to be like, oh yeah, we're gonna break that, we're should keep going down in a straight line, not reasonable. But like if we had a bounce that came in here, we got back up in here, that's where you'd start seeing me screaming again, like here and all throughout in here. But as we're just heading straight down, it's outside of my skill set to say we keep going way, way, way down. Because when I look at Bitcoin and see that, hey, it's the most oversold it's been in history. It's down 74% from the all-time high, considering it's the most oversold in history. And like when we pulled down here, this is a 70% drawdown here in Bitcoin. Look how oversold it was here at this time, right? Still, it came in with a bounce, but then worked its way till finally it got to oversold over here. Look where we're at already right now. I mean, just logic would say, hey, bounces make pretty good sense, but you look at Grayscale and it doesn't paint that picture of bounces happening in here. So you got those Bollinger Bands that are holding there on the monthly time frame. You have the previous all-time high holding up the entire cryptocurrency market, the all-time high from back in 2018, holding up the market cap of all of crypto. You also have the weekly candle closes from the previous all-time high holding up the altcoin market, along with the 200-week moving average still holding up the altcoin market back here. That also was a pinpoint nail right there on that 200-week moving average, still holding up the altcoin market. But at the same time, Grayscale Bitcoin Trust looks ugly. Metals are breaking down after years of being held up. And to be fair, it's not like metals have worked in tandem, right? So like you can go back and look at silver from back in 2013. That silver was really in a fall for a lot of 2013. And, if you don't know, Bitcoin was in a massive run during that time. Here, let me do this. We can kind of overlay them like this, and you could see that, hey, silver was in a fall during this time period, but Bitcoin was rocking. It was really in a downtrend this whole time. Meanwhile, Bitcoin was rocking, and it wasn't until here, and then Bitcoin still started turning up. Then silver still went flat all throughout here. Bitcoin kept going up during that whole time. So it's not like there's like this perfect correlation between the two. So it's hard to make a fair argument that they are correlated, because like silver is definitely a commodity. And, people want to compare Bitcoin to being a commodity, but for some reason it has a lot of correlation with the equity market and the stock market. And so, we could see that whole 2018 through 2020 time period, how all of this happened. And then as we've kind of been rolling over here in the stock market, so has Bitcoin. But Bitcoin's obviously gained a tremendous more amount of speed in here. Whereas since this moment right here, the Dow Jones is only down 5%, yet Bitcoin is down 48% since that time period right in there. But yeah, question is, will the Dow Jones end up holding these price levels in here? Is it going to take a bigger stab even lower? We got labeled as being in a recession today. The 10-year yields are acting wonky and they're getting to a kind of a rollover standpoint here on the indicators and only being able to wick above that 2018 high back in there, not able to close above it. So is the bond market calling the bluff on the Fed, saying that the Fed is going to have to intervene? And then the question comes, well, how long will the Fed wait before it starts to intervene? And is inflation really even a thing to even be worrying about anymore? And is it more about recession fears, right? So the big concern has been inflation, inflation, inflation. Now it's recession, recession, recession. I don't know. These are two elements that are vastly different in this time frame, but I think for most of us who have been in the cryptocurrency market and without any type of reversal volume happening here in the cryptocurrency market, all signs point to down. What we really need to see is some type of volume come in, some type of sign come in to say it can bounce. And right now, it still is holding the candle closes for Bitcoin above the 2018 all-time high. Same goes for the total market cap and even those moving averages over there on the total market cap and on the altcoin market cap. But, picture's real murky out there. We look at the charts a lot. That's the primary thing we focus on over here. But it is becoming a weird situation out there with us now being labeled in a recession, all the institutional breakdowns and insolvencies that are happening here within the cryptocurrency market. And while bottoms are not usually marked by like retail investors being excited because, being here in 2018, the bottom doesn't come in when all retail investors start pouring back into the market. Retail investors pour back into the market at tops. So that's not when they come in. They don't come in at the bottom. I promise you that from 2018, it was like a disaster zone here in late 2018, early 2019 when the bottom ended up coming in. The retail investor crowd doesn't come euphorically back in until prices are already really high, like we witnessed there in 2021 with laser eyes and diamond hands. They all come in saying, "Hey, I've got the strongest laser eyes and diamond hands in the world." But of course, it's because they bought the top, right? So, you say to yourself, or at least I say to myself, I say, man, what is going to get people to bring money back into this market right now? Consumer sentiment is at its all-time lows. We just got labeled being in a recession. Rates are all wacky. What's going to happen with the housing market and the automobile market? But I have to remind myself, they're not going to come back in at the bottom. They're just not going to. They're going to come back in at the top. But then I say to myself, well, how long is that going to take for them to come back in and for euphoria to return back and for confidence to return back? We probably need to see a lot of changes happening in the markets for things like that to happen. You'd probably want to see stock market getting back near the all-time highs, which for the Dow Jones being at its 200-week moving average and being above there, right? So it still hasn't gotten to a 4.236, right? What if this gives us that last leg up to get up to the 4.236? Is that where they come euphorically returning back into the market? But then if we start taking out those levels, what do you lose in there? You lose weekly moving averages. You lose previous support levels. I don't know what I was trying to say there. And the picture just gets far worse. So time-wise, I don't know. But it was nice to read this report that was written up by Generation Infinity, their Lighthouse report, which I'm not affiliated with them. I'm not sponsored or anything to promote them. These guys have a lot of people that you guys know, Crypto Eddie, King Solomon, Jeremy Hogan, writing up this report, talking about the growth that's still taking place with a lot of institutions and Visa and MasterCard and worldwide adoption of blockchain technology, and that the space isn't going anywhere. And Ben saying, a crypto tsunami is coming. The tide gets pulled back hard to help build the wave that no one sees coming. We're in the midst of the tide getting sucked in. That's what a bear market is. But rest assured, the tsunami is coming and it's going to be bigger than ever. And that is wild and wacky and crazy and fast as this has all happened, much faster than I expected it to ever happen. That tides come in and tides come out. But the space isn't going anywhere. The thing is, we're just dealt with a ton of stuff right now, and figuring out how to handle that, very difficult for everybody to make up their own minds on how to do that. We could look at these charts. We could say, hey, man, look at that total altcoin market cap. It is holding that 200-week moving average. It is on top of that all-time high. There's still money sitting in here on the sidelines, whether it's sitting in stable coins or sitting in the altcoins or wherever it's sitting. There's still money still in this market. It has not run away. But then it comes the bigger challenges of assessing, what will happen next? What impacts does a recession have? First, the whole thing was inflation, right? I think it does seem like the narrative is going to start changing a little bit about inflation, that inflation has topped, inflation has peaked, and the whole narrative is now going to shift to recession and how to focus on handling a recession, right? And then not to be able to say I'm going to be able to pick the bottom on a recession or something like that. But we could look back to here that we've had two kind of recessions that have happened here on this chart in this time frame. You had the C19 short recession, and then you had the Great Recession. But the Great Recession, it lasted all throughout here, right? It lasted for a few years. But the bottom of the market came in way before the recession was ever over. We were just in the depths of the recession during this time, even though we were recovering. And then our recession in here, this was just the stock market sell-off, and then the bottom came in, but we were in a recession during this time period, right? So it's not like just because a recession was labeled that the market had to keep falling and falling and falling and falling and falling. And then we all said, great, the recession's over now, let's go. That's not how any of them worked, right? They worked in which we went into recession, but then the bottom of the markets came in way before the recession was actually over. So it'll be an interesting time for sure. And I think one of the bigger things for me to watch out for my macro perspective is if the Dow Jones is going to break below there. If the Dow Jones breaks below there, it's just going to be a look out, watch out. We start losing 200-week moving averages and we start taking out that highs. It will look like a bubble pop for the U.S. stock market. And, everybody's talking recession. But if you got something like that, we haven't seen a depression in our lifetimes. And I think that people in the cryptocurrency market of what we've all witnessed just in this last month got a taste of wondering what it would be like in real financial markets with leverage, liquidations, insolvencies of real corporations, real banks, real institutions. What would that be like, right? The stuff with Three Arrows Capital that had a bunch of knockdown effects around the rest of the market. It just kind of seemed like, and don't take me, I'm not fully rehearsed on everything, but it seemed kind of just irresponsible Deegan kind of stuff with not enough collateral backing up what was happening in here. And I'm sure that stuff does go on out there in the stock market, in the real world. And what would it be like if we saw the insolvencies of major players in the real world? And I'm not here to sell you a fear narrative. I'm not here to tell you the end of the world, right? We're only down 16% from the all-time high here on the Dow Jones Industrial Average. It's very easy to talk about scary things when prices are down. But boy, it was a good little wake-up kind of call on watching what happened with the cryptocurrency market and insolvencies and the knockdown effects that could happen in the stock market if those same things start to play out. So whenever that day does come, I bet those are the types of stories we'll be seeing on much bigger scales from probably much more familiar names. But until then, we're still not there just yet. Either way, the stock market is still holding. And I'm rambling now. This video is getting kind of long. I think it's just kind of a weird day that we get labeled to be in a recession, and then you see such strong moves down in the Treasury yields after they attempt to break trends, but they end up failing, and they attempt to break previous highs, and they end up failing. And then we start to see the rollover here with bearish divergence happening on these things. And at the same time getting labeled to be in a recession. So I don't know. As you guys know, I'm friendly with TXMC over here on Twitter at TXMC Trades. We actually had a 2-hour long conversation about this morning and all these different things happening and how, if the Fed's going to have to pivot and what does that mean? And will there be one more rally that does come out of here in the stock market right up in here where the Fed pivots? Everybody says, yes, here we go. We get back in, because it is very odd to be up here near the all-time highs. And you just have everybody and their mom saying, we're going to go into recession, things are going to collapse, it's going to be bad. It's not usually what happens. What usually happens is recover from there, and it's where everybody doesn't believe it on the way down and then finally does. But I would say a lot of people are worried that this thing is going to get collapsing pretty hard from here. And will it have just one more reach out where people say it returns to normal, the Fed pivots, they start injecting liquidity? Because right now, at the rate that they're wanting to go at, they won't be able to service the debt. It's just not mathematically possible for them to be able to do it without bigger problems coming in. But the question is, when will they have to make that pivot? Will that pivot be good enough? Will they be able to inject the economy with liquidity and money, get those printers rolling? Because they're going to have to. And if they don't, we could be in for a situation we've never seen before in our lifetimes. So I always found it weird that silver was able to get up here but not keep going, even though the inflation numbers were happening. And we see silver rolling over now. It just seems like it, right? It just seems like the inflation narrative is done. Problem is, of course, we still have high oil prices, we still have high gas prices, and those have trickle-down, knockdown effects on all of our goods and services that we buy. So you have the complications with that too. But it seems like silver and gold and platinum are telling a story, and wheat, corn, commodities are telling a story as well, with all of those moving down big numbers, that the story being told is far more complicated than we may think or have the interpretation of. So, ton of rambling in this one. Just kind of wanted to show a lot of different things, to talk about a lot of different things on how crazy the picture is out there in the world. We'll see what happens to Bitcoin throughout the weekend. Again, multiple places I'm seeing the worries are about the liquidity throughout the weekend, and what happens is we have a banking holiday and a 3-day weekend. I as well will be off on the weekend, spending time with my family, and I'll be back on Tuesday. There's several warnings out there watching out for a low liquidity holiday weekend out there. So predictions existing out there are saying, hey, Danielle DiMartino Booth said throughout the weekend, first of all, she doesn't believe in Bitcoin. She thinks it's silly, but she said she's going to be watching Bitcoin all weekend this weekend. So she thinks it's going to be a wild weekend. The GBTC chart of a crashing structure would corroborate the possibility of that happening. But the Bollinger Bands on the monthly time frame would tell you a different story. And so would the altcoin market cap over here with the 200-week moving average and the all-time high. So you guys kind of got it all, right? I mean, you see that the Bollinger Bands are holding. You see the all-time high holding for the altcoin market along with the 200-week moving average. But at the same time, we just got labeled to be in a recession. You have a crashing structure showing up on GBTC. And you have a low liquidity weekend coming up here where a lot of people are predicting big price action to happen over here in the market. So we'll see how it goes. I'll check in with you guys again on Tuesday. I hope that you all have a wonderful weekend. For those in the United States, happy Independence Day, happy 4th of July. My family and I, we always get together. We meet at my in-laws, and everybody buys those big fireworks, and we all shoot off a bunch of them at the same time, up in the sky. And we do it at my in-laws, and like my in-laws are, of course, like the most popular people in the neighborhood because they have the best fireworks show in the whole neighborhood. But we all bring a bunch of it over there and do it, and the neighbors all love it. So hopefully I don't get injured. I'm always worried about fireworks. I deem myself, my middle name is Mr. Safety. In my older age, I ditched the danger and I always play Mr. Safety. Maybe it's because I have kids, and I actually did crack my head one time really bad when I was a kid. So I'm always Mr. Safety about helmets and fire safety. I've gotten burned on the 4th of July pretty bad before. I had an ambulance called one year. So I don't know. We're rambling too much. I think it's because this video has gotten too long. But I hope that you guys have a wonderful weekend. I'll check in with you guys again on Tuesday. I want to thank you so much for watching my channel. If you could, please like this video and give it a thumbs up. If you're new to the channel, please subscribe and hit the notification bell so you can be notified of when I create new content and when I go live. As always, this is not investment advice, and I am not a financial advisor. But if you ever need a pick-me-up or a little bit of reassurance, just remember that the blockchain backers got your back. Have a good one.